How to read stock charts for day trading is our topic today. And we're going to look at one really known principle that a lot of people live and die by. And of course, it just makes common sense. This has a lot of logic to it. And it is that you should not trade during the lunch hour, middle of the day, which is around noon time, New York time. The professionals, they turn over their accounts to the people who are just going to kind of watch things, manage them, but they tell them, but don't do anything, just make sure nothing bad happens, right? And they go have their 3-martini lunch and come back, and then the real professionals start trading again. In fact, there is even a saying that I heard that is, let's see, how's it go again? Oh, don't launch during lunch, meaning don't launch a trade during lunch. And so, of course, that must absolutely be true. So let's take a look at that, and let's see how that is actually a bunch of hogwash. That's right. Don't trade during lunch is outdated, outmoded, anachronistic. It is wrong. It is a horrible idea. And why is that? Well, first of all, let's look at some examples here, and then I'll tell you why, and actually why it's not a logical thing to do. So, lunchtime again, 12 high noon, and usually runs for about an hour, hour and a half. And some people will say, well, you should start at 11:45, whatever. Okay, but we're in the vicinity of 12 high noon. Well, as you can see here today, and we're just going to show a few examples. Obviously, you can look this up for yourself. So in the morning, a lot of people say, oh, there's a lot of activity in the morning, a lot of volume in the morning. And quite often there is, although this particular day, this is, you can see Apple 3-minute chart. And by the way, what I'm doing is I'm just showing a whole day. There's nothing magical about a 3-minute chart. You could do this with whatever time interval you prefer. Okay, so, and people will say, oh, there's more volume in the morning than any other time of the day. Okay, well, you know what? There's a lot of things people say, these old sayings that people live and unfortunately die by, because a lot of these concepts are old. So it is true that a lot of times we get a lot of volume in the morning, but this day we don't. And where's the volume come in? Comes in the afternoon. Well, wait a minute, that's not what's supposed to happen. That's not what I was taught. That's not what the book said. That's not what the video said. That's not what the guru said in the last course that I took for $17,000 or $618. Don't know why they priced it at that. Mystery. If you know that, by the way, type it into the comments if you know why I said 618. Okay, but let's look at what actually happens, because talk is cheap, actions speak louder than words, and all we really care about are the actions in the markets. So at 12 high noon, so we get this move up, we get this move down, we get this move up, we get this move down. So what we see is as soon as there's just everybody starts leaving for lunch, supposedly, that's what they tell us, then boom, the market takes off again, moves up. Then we get sideways movement a little bit, and then it does take off in the afternoon again when things are supposed to have quieted down. What? But this does not follow the model that we've been taught. Lunch is actually an active time. In fact, this would have been a very good time to take a position right after lunch started, right after everybody supposedly leaves for lunch. That'd be a great time to enter a position, and you could have been in it for the rest of the day. So what gives? Okay, let's look at another example. All right, welcome back. Now, this happens to be the very next day. I'm just taking these day by day. I'm not randomly choosing charts. I'm just literally going day by day. So this is indeed the very next day. All right, so again, we got a good move up in the morning. And then lunchtime comes. And so now, of course, according to the gurus, we're supposed to stay out of the market for the next hour and a half or so. Well, what happened during that hour and a half? You can see that would have been a great time for a trend reversal trade. All right, during that whole lunchtime, well, supposedly everybody is off having their burgers. Nice, beautiful trend reversal trade, mucho dinero, many marks are made, and you could have gotten plenty of pesos. absolute downfall of dollars, and you get the idea. So what the heck? What's going on? Huh. Okay, let's take the next day. Okay, my friends, very next day. And let's see what happens this day and how this amazing, well-known pattern of staying out of the market during lunchtime is so ingenious. So, well, let's just look at the lunchtime here. You get the idea. So 12 high noon. Okay, the market had actually been consolidating into 12 high noon in there. So actually, the hour and 15 minutes, almost hour and a half before lunch is when it was actually calm. And then if you came in, again, notice how this stuff happens like right after 12 noon. And all of a sudden, kablambo, goes back and then it consolidates a little bit and then kablambo again. And then, well, then everything goes higgly-piggly. That's, by the way, a professional technical analysis term. Higgly-piggly means that rumor, gossip, news, whatever comes into the market. Obviously, there's a catalyst there. But again, for our main point today, we're not going to go off topic here. We're going to stay on topic. Entering in right at the beginning, or just right after the beginning, actually, of lunch. Isn't that interesting? Each one of these scenarios, it's right after the beginning of lunchtime. And most people, actually, if you talk to them, they will say that lunchtime actually begins before 12 noon. It starts maybe around 11:45. I hear that. Some people even go as early as 11:30. And so there's a pattern here of, hey, wait a minute. Actually, we get these big moves, big swing highs, big swing lows, and then followed by a nice move right after everybody supposedly goes to lunch. So the principle behind this is once everybody knows some sort of principle in the market that everybody says, oh yeah, that's true, that's exactly when it stops working. Old adages are not only old, they're outdated. And the market, remember, the market's always trying to mess with you. It really is. It might seem that way, and you might have felt that way and kind of have even a subconscious feeling that, oh, dang it, it just seems like the market's out to get me. Actually, it is true. I did another video on that, by the way, on YouTube. And the reason is because, well, what's the purpose of the market? The market is the market participants, right? When we talk about the market, it's not some neutral thing. It's a bunch of people and the algos that they have programmed. And their whole purpose is they want to put money in their accounts. So where does that money come from? It comes from your and my account. So, yeah, they want to take money from our accounts and put it in their accounts. And so in that sense, the market is against you in a very real, literal sense. So what's going to happen is once everybody knows something and they feel that that's true, then market participants are going to do the exact opposite and undermine what everybody knows. Basically, if you can Google a technique or strategy or pattern, that's when it's going to stop working. If you can Google it and see a lot of results, I should say, so enough that where everybody's Googling this and everybody knows this pattern and everybody starts accepting it, that's almost exactly when it will stop working. So professional traders, we're trading things that the average person isn't doing, and it goes back to the herd instinct. Again, once everybody's doing the same thing, well, that's the herd. And you've got to evolve. You've got to shift. The market is not a static thing. It doesn't stay the same year after year after decade after decade. I've been trading for over 50 years, and I've had to evolve with the market. And I know it seems like a long time, and it is, because my dad was a stock trader, so he got me started when I was 8 years old. Believe me, I'm not trading now the way I traded when I was 8 or when I was 20. So you've got to evolve. I encourage you to get my cycle indicator. This is something I give to the entire trading community for free. Just go to indicatorwebinar.com, and not only do I show you how to set up the indicator, but I show you how to trade it. It's absolutely free. It's a recording, so you can watch it whenever you want to. And finally, subscribe to the channel, and that way you'll get notifications of future tutorials. I'm doing about 2 or 3 of these a week now, and you want to make sure you get notified when new ones come out.